Hello, everyone. Welcome back to another Investing with Dan. Please like and subscribe. It really helps out the channel. The company we're going to look at today is Watches of Switzerland. But first, I'd just like to go into some news that came out today. So the UK economy grows slightly for a second month in a row. What they're saying is gross domestic product grew by a massive 0.1% in February. And they're saying it's another signal that the UK economy is working its way out of recession. Okay, well, so growth is growth, but all these monthly figures are subject to huge revision, and we probably won't hear about it if they do go higher or lower, especially if they go lower. And as you see, here's the graph. This graph of monthly changes of GDP. Well, it's not really setting the world alight, is it? The UK economy at the moment, as at 0.1% or 0.2% here and there is not going to change the fundamental problems we have in the economy with budget deficits, etc. Also, interestingly, swap rates have begun to increase again after the news from the US about higher than expected CPI inflation. Interest rate expectations obviously have been pushed back, maybe September, even further towards the tail end of the year. So interest rate swaps have actually increased now, if I could just get the screen correct. So we're looking at, there were mini lows of about 3.6% on a 5-year swap rate, and now this has gone up by nearly, over 1.5% to 4.29, which is back where we were in December. So all those people were expecting interest rates to fall quite quickly this year. Well, that's not happened. If you were lucky enough to get a get a mortgage offer, a remortgage offer in early January, then you've done pretty well, I think. Actually, if you scroll back, you can see where we come from. 0.2 swap rates back in 2020. So yeah, very much at elevated levels. And, the big peak here is the trust budget. Maybe it was her fault, maybe it wasn't, or maybe it was all just coincidence. There you go. So Watches of Switzerland. So yeah, there have been a few luxury brands which have fallen in share price quite a lot recently. Obviously, because the high interest rates, high inflation environment. Watches of Switzerland down 50% year to date. 45% year to date, and down 50% in the past year. In February, there was a trading update which provided sort of profit warning. Oh, I'm going to go on to today's figure. Let's go back. So yeah, in February there was a profit warning. So I think the share price fell about 36% of the day. Yes, quite a lot. Watch of Switzerland did very well during the pandemic and post-pandemic. So another stock that has peaked in that late to 2021 and was down 74% since then. The company floated on stock exchange relatively just before the pandemic, so a year before May 2019, and is only up 20% since then. Okay, so let's look at the data and the earnings expectations. So last year, Watches of Switzerland had an earnings per share of 51. So this was at current share prices, this would mean a PE of around 8, which is, on the face of it, seems very cheap. This is expected to fall this year to between 36 and 50, big range, but average of 39. So this would push the PE would still be below 10. And next year, again, big difference, 30 to 57. There's a doubling there from the lowest to the highest. So even at the lowest, though, PE of 12, 13. At the highest, this could be, very mid single digits PE. Sales growth, so expected to slow down this year and next year, potentially 10% sales growth. The EPS trend, part of the reason for the big share price decline in the last year to date is the revisions to EPS expectations. So we had 50 and now it's dropped all the way to 39. But at least there's some stabilization in the last 60, 30 days. And same with next year, 59, and now it's 44. These, especially 2025, is subject to potentially big changes. Just go on to Barron's now. As you can see, year to date down 47%, current PE ratio around 8. Start off on the income statement. See the sales growth, it's doubled since 2019, largely on the back of post-pandemic boom in the luxury watches and luxury. Everyone had all this spare cash to spend, which obviously slowing down now due to the high inflation environment and cost of living crisis. So yeah, big growth, 36 and 24% in 22 and 23. Net income, see, it has increased a lot over the period as well. So 121 million last year. It's good to see that there hasn't been any share dilution. So 239 million shares in 2019, 237 in 2023. So there was a share buyback program. I think that's been stalled now. On the balance sheet, cash generation has been strong. We just go on to the quarterly basis to see what the latest figures and cash. As you see, it's fallen a little bit now. Inventories for retail companies is something to definitely look at, especially in times of slowdown. A big build up compared to market cap or sales could be considered an issue, and this has been growing for Watches of Switzerland. Obviously, they're a growing company. They've been growing in Europe. They've been growing, especially in America, where we'll get to in a second. But America is now bigger than very close to. Well, it's bigger than the UK, but nearly as big as the UK and Europe sales combined, and it is actually growing, unlike the UK and Europe. The inventories have been increasing larger than or at a quicker rate than I would like to see, especially compared to market cap. So 800 million, circa 800 million market cap. And we're looking at 356 million inventories. And I think that's actually even higher now if I just go on to the latest. This says quarterly, but this is because this is a US website. But it's actually, as you can see, April, October. So it's 6 monthly when you look at UK companies. So inventory is now, probably over 400 million now. So that is close to 50% of market cap. Something to definitely keep an eye on. Just look at the debt now. So we're back onto the annual view. Short-term debt, steady, nice to see. Long-term debt has been increasing, but if you exclude capital leases, because this is a growing company, they're still in their retails. That's what they've got their physical stores, and a bit like JD Sports, they're sticking to the physical model. If you look at the long-term debt, excluding capital leases, it has actually decreased from 239 million to 120 million. It's up to the individual investor whether you would include long capitalized leases or exclude them. It's just balanced out in the property section. If we just go up to the property and plant section, so that will increase while capitalized leases also increase. But one of the handy things about the Barron's website, it does differentiate between the two. One thing that I do think is very strong on the balance sheet for Watches of Switzerland is the total equity growth, especially comparing that to the current market cap. It's been very strong, growing from 76 million to 470 million. I wasn't able to open up the Watches of Switzerland website investor relations. I think there's something to do with the cookies wasn't allowing me to accept. But if we just have a look at the trading update, you can also access this on Hargreaves Lansdown website is where I usually go to. As you can see, the group revenue Q3 for the financial year 24 is lower than Q3 23, so 1% at constant currency and at -3% at reported rates. So yeah, have a look at this. If you look at the performance by geography, as I said a minute ago, the US revenue has, at a constant currency basis, up 8%. So now it's 175 million, compared to UK and Europe revenue at 222 million, which is actually down 7% on the year. So on the balance, sales were down on the year, but US revenue is growing quite strongly while UK and Europe are declining. I think the US economy, there's still a lot of people have got a bit more cash from the government handouts during the COVID pandemic. And obviously, they've been less affected by energy price shocks and the whole cost of living, although obviously their inflation rate is still reported to be 3.5%. So, yeah, have a look at this. Plenty of data here. Main growth for Watches Switzerland is abroad in the US. The UK, yeah, they seem to have saturated the market a little bit, and we'll probably have to wait for any economic rebound, or as they've also been talking about, international sales and the tax-free in airports, etc. So yeah, I think we've been waiting for an economic rebound for any UK and Europe sales to increase. It's tough out there for luxury brands, but when the share price is down 75% and the company is still profitable, I think it potentially is an opportunity here. I mean, the share price could fall quite a bit. Well, who knows how much further it can fall, 10, 15, 20%, or this could be near the bottom. So last month, there has been a slight steadying of the ship and the share price, down 2%, and I think up about 12% since the lows. I have bought a small position, I think around the 350 mark, so 4 or 5% higher than it is now. But this can, any economic news, interest rates staying higher, yeah, it could go down 10, 15, 20% quite easily. So be prepared if you want to invest in Watches Switzerland or another company in this sector, that be prepared to lose money, at least in the short term. Another company that has fallen, that's been on my radar, is Burberry. So very similar reductions in the falls in the share price. So Burberry down 52% in the last year, and year to date only, well, I say only, but 14% compared to Watches Switzerland. What was it, 45%, something like that. Burberry, yes, down 53% from their peaks. It hasn't gone anywhere in 5 years. Down 38% in 5 years. I think that might be a video for another day, but yeah, have a look at other luxury stocks and see how they can compare. There are some of the big French, I think Prada, etc. Hermes, I don't know how you pronounce it. Their share price has done pretty well. So there are some companies that are still doing well. So they're up 282% year to date in the last 5 years. Sorry. So there are a lot of companies doing well, but there are some luxury brands that aren't doing so well and could potentially be bargains out there. Anyway, thank you for watching. Please like and subscribe. See you on the next one.